been a little while since I've done a video, so just thought I'd make one today covering Cardano, Voyager, Ethereum, and the S&P 500, since we've seen an increase in correlation between crypto and the stock market. All right, so with Cardano, I'm just going to zoom out for a second. So we'll just take a look at, so here's the larger count. All right, so the outlook is that we had a major top in September. We did call this correctly, which it topped as Goguen was released, which fundamentally great news, but it wound up being a sell the news event, and this was a fifth wave suggesting that this rally was done, and that did turn out to be the case. So it's been a pretty steady downtrend ever since September. All right, so if we zoom in here to the more local count, so we're looking for this red wave 2 to at some point find a bottom and come to an end before we resume higher in a red wave 3 and eventually make new all-time highs. All right, so starting from this wave X, so since January. All right, so we're looking at an ABC correction since then. So we have wave A in place. All right, now from there, if we look at this closely, it started here with a pretty clear three-wave rally. To me, that telegraphed that anything that came after this was just going to be a part of a correction, right? So we have a three-wave move up here, three-wave move down here, and this is five-wave move up to the top here, but because it started with three, we know that it's corrective and that it's eventually going to come back down. Vast majority of the time, something starts with a three-wave move off the low. That rally is just corrective, and in all likelihood, it's going to come down and make new lows. That's what we saw here, right? So we saw have an A here, B, which is a counter trend rally up, and then heading back down. Once we started overlapping this area here, you know that there was a very good chance that this low was going to be broken. And so we did come down here, broke the low, wave 1, rally in wave 2. Kind of a vertical drop, quick sell-off for wave 3. I'm looking at the bounce from the low here as a wave 4. There's a chance that this may not be done. If it extends into a more complex correction, it could move sideways for a while. I wouldn't expect it to come all the way up here to this 1. It should stay under that, but there's a chance it stretches out more. But if it's done here, then this initial pullback here is wave 1 of this wave 5 down here. All right, so we have 1 of 5, 2 of 5. With this Roman numeral, I'm looking at this as part of wave 3. So this wave 3 is likely to subdivide into three waves on its own. It doesn't have to. We could get a diagonal. I have a little alternate count here, which maybe this 2 is, we really have 1, 2, 3, 4, and then come down for 5. That's possible. In a diagonal, the wave 4 does overlap the wave 1. So that's just a possible, but I think it's more likely, based on what Bitcoin, Ethereum, and most other coins are doing, that this is probably just wave 1 of 3, and we'll see it come down a bit further before this wave 3 finishes, see another bounce, and it may come into this range here that I'm eyeing, this 21 cent to 27 cent area. All right, so 27 cents, this represents previous structural support, which we don't know if this is going to be support for us again until we actually hit the area. If we hit it in bounce, we know it acted as support, but there's always a chance that it just goes right through it. The blue line, that's the 50% log adjusted Fibonacci retracement from the March 2020 low, basically the entire bull market for Cardano. If you adjust this pullback to log scale, this is where the 50% mark lands. And then 21 cents. So if we just kind of forego the wave labels for a minute, look at the structure of this. It does kind of look like a bear flag, these parallel lines. If we measure from the top of B, right down to this wave 3 here, and then the top of the bear flag again here, it does measure down to 21 cents. So bear flag measuring down to 21 cents. As far as measurement for where wave 5 might end. With fib projections, I think we'll have to wait and see how much further this wave 3 goes and where it ends. Then we may be able to project at that point. There's a good chance that it's going to end in this range, though. Now this green line. So this green line is the volume weighted average price from this wave B peak. Just telling us the average price that Cardano traded during that time frame is a good indicator for whether or not sellers are staying in control. And if it can push above this and hold above, then it signals that, relative to this peak here, that buyers in this area have regained control if it can hold above it. Now that hasn't been the case. So you can see this wave 2 came just beneath it and was rejected from that area. This wave 4 also came up, rejected from the same spot right at the level. Same as this 2, just less than a penny below it, and it's pushed down. So until we can get above this volume weighted average price from the previous peak, it's a good indication that sellers are still in control. All right, so that's Cardano. I'm expecting this to push a little bit further down, at minimum take out this wave 3 low. So I'm looking at this bounce from the May 12th low as being corrective and likely to eventually resolve lower. All right, so Voyager. I don't have Elliott Wave labels on right now for Voyager. Part of that is just because I'm missing a lot of price data. So everything since the token swap has been taken off the chart. But we can still use the wave principle to help gauge the direction of the trend. From this top here, we can see that there's a 5-wave move down, and that's followed by a 3-wave rally. Right, so 5 waves go in direction of the trend. That tells us that the trend is down. A 3-wave rally that then comes back and overlaps this area. That's telling us that this bounce was just a correction. It's probably not a true reversal of trend. Indeed, that was the case, and it's sold off again, took another leg down. Now from here, again from this May 12th low, actually similar to Cardano, it's had a pretty good 3-wave balance in this case, actually more than 100% gain off that low. But again, this volume weighted average price from the most recent peak came right up to that area, rejected from it, couldn't hold above. It did wick slightly above, but could not hold it, and then resolved lower. Although, unlike Cardano, it did take out this low already. I don't see anything here that suggests there could be that there is a bullish reversal of the trend. To me, the trend still looks lower. All right, so you can also interpret this as a bear flag. On the measurement from there, just line it up with that peak. It takes us right to about 33 cents. So 33 cents is the projection for the next leg down based on this bear flag pattern. So, Voyager trend still looks lower. Okay, now for Ethereum, if we just look at the overall market structure, so topped here in November. So we have a leg down here. Again, look at that corrective very clear 3-wave rebound. And then came back down into this area, kind of telegraphed to us that this structure was likely to resolve lower. It did. Formed another continuation pattern. So this turned out to be an Elliott Wave triangle. And we got a really clean breakdown thrust from that triangle to form at least a temporary low. We bounced up a little bit, but now we're hovering right above it. This 38.2% retracement That's adjusted to log scale right at 1050. So it was just within $40 or so of this target. This was one of our downside targets. Now if we add the Elliott Wave labels, we look at this a little bit closer up. So from the triangle, you see A, B, C, D, E. It actually looks like wave E itself formed a miniature version of a triangle and then pushed down from there. So from here, I'm counting, we have, so this would be the end of wave 4. It's nice to have a triangle here because that helps confirm that this was wave 4 and that we're not miscounting this. So triangle can't form in the wave 2 position. If it's in an impulse, triangle is always in wave 4. So that helps to confirm the count. So we have wave 1 down, little wave 2. Looking at this as wave 3. It's possible wave 3 is over here. Just kind of tag this target right here and came up. This may still just be part of wave 4. I don't think that it's 3. This is maybe a little bit small to be all of wave 4. And coming back down all of wave 5. It is possible, but I don't think it's likely. I think more likely we're going to maybe see a little bit more sideways movement and get one more push down for wave 5. Now this pink line here, this is the 300-week moving average for Ethereum. It's coming in right around 900. And then a little below that, around 600. We'll go back to the other charts. This is the long-term bull market trend line, which right now it's coming. And so if we were to go down and hit it, it would probably be right around 600 if we were to go this low and reach it. Nothing says that we have to go this low and reach it. We just need one more small push down. That should end 5 waves, the thrust from this triangle. And then from that point, we should get a rally, I would expect. Probably a pretty significant rally, because that would be ending this wave C and this wave Y. Potentially this, this big red wave 4 as well. Now off the low, what we want to look for is, are we getting a 5-wave push up, or is it just, one of these like little, 3-wave bounces that's going to resolve lower for another push down, right? If it's just a little 3-wave bounce, then starts overlapping itself, looks choppy, it's probably not bullish. It's probably just a little relief rally that's going to be followed by more downside. But if we can get a 5-wave move up, so initially past this 4th wave area, and then eventually past this triangle, clear that's going to be the larger obstacle, then that's a good sign that there's a more sustainable trend reversal, and that this wave 4 is done, and we're heading to all-time highs in wave 5. All right, so that's Ethereum. In summary, just kind of looking for one more small push down below this to a new low, maybe to 900 or so at the 300-week moving average. Okay, so the S&P 500. So the stock market's been pretty interesting as well. So top for the S&P, January 4th. All right, so from there, in real time, I was counting this correction as a counter trend move. So considering that this peak here was wave 3, and that this pullback is part of a larger wave 4. Now we are very close to invalidating that, right? So if we cross this red line, then the alternate would come into play that maybe this here was wave 5, potentially the end of the entire bull market. There's kind of a secondary alternate that I've seen proposed by some others that maybe this is just wave 1 and this pullback is wave 2. That's extremely bullish. It would be great if that's the case, but I don't want to default to that being the base case. So if we overlap this red line here, my alternate is that, this is wave 5. We have 5 waves up from the COVID low, and a larger bull market is complete. All right, so with the S&P, if we zoom out a little bit, so let's start right here. So this wave 4 bottom. All right, so that's the March 2020 low. And then we have, 1, 2, 3, 4, potentially 5 waves up from the COVID rally. This is that alternate count, right, where wave 5 peaked here, and then we have a larger 5-wave move also that completed from the March 2009 low. So bottom of the financial crisis. 1, 2, 3, 4, and 5. Pretty clear 5-wave pattern. Overlapping this wave 1 would provide good evidence that this whole move is also done. Right, so the thing is that not only are we correcting part of this move from here to here, we're also correcting part of the move all the way back from here to here. And the prospects of that are potentially a much deeper correction. Reasonably, you can expect a pullback into the prior 4th wave. In this case, that would actually retest the COVID lows. Now, if we look at it on a longer term time frame as well, and this is part of why I'm being a little bit more conservative with the count rather than saying, oh, this is just wave 1 of 5. Counting this as wave 5 of 5 because it does have some longer term implications as well. So if we head over, let's see, so S&P on the monthly time frame. All right, so we just looked at this stretch from 4 to 5. All right, so this the great financial crisis, that 09 low, that was the bottom of a 4th wave. All right, so you had .com bust here, rally up, and then financial crisis. So all part of a kind of a long drawn out 4th wave, followed by a 5th wave that may be complete here. So completing this 5th wave here also completes a 5-wave cycle from this wave 2 down here. So this wave 2 is essentially the bottom of the Great Depression. Going all the way back to the 30s, right? So we have a wave 1, a wave 2, an extended 3rd wave, 4th wave, and a 5th wave. All right, so that is part of this even larger wave 3. All right, so if we start all the way from the beginning here, so this price data goes all the way back to the 1800s. So the 1800s coming up into the 1929, we can count that all as a wave 1. This as a wave 2, right? Wave 3, and then we'd expect to pull back to wave 4. So a 4th wave can reasonably be expected to pull back to the prior degree 4th wave. Right, so the prior 4th of 1 lesser degree, that's sitting right here at the 08-09 lows, this great financial crisis area. Right, so potential support ranges, we'd look at initially, the COVID lows here as a potential support area. Down here, you have the top of this 4th wave, right? So just testing the peaks from 2000 and 2007. If it pushes down below that, another area to watch would be the bottom region of this 4th wave, which is basically the bottom of the .com sell-off and the bottom of the financial crisis. So I mean, it's a pretty bearish outlook, but I mean, according to Elliott Wave theory, if we have all this complete, we're looking for an even larger wave 4. It's a pretty significant correction. So it's not, again, not just. So we just said not just the COVID area that we're correcting, but even down here, this wave 5, but really this whole wave 3 down here. So it should be retracing a percentage of this. I think coming down to this area, maybe sub 1,000 on the S&P, as a base case, that's probably the most bearish scenario that I'd be looking out for. I've seen some fairly apocalyptic calls looking for a pullback, as low as 100 on the S&P, but I don't think that's likely to happen. It would be incredibly undervalued at that point. I think you'd have to have something pretty extreme happen for it to go that low. But I don't know that we've ever counted waves at this degree before. So that's the thing. So it'll be interesting to see if the Elliott Wave theory does pan out at this degree. So when we're looking at data, spanning 100 years at this point. So as we take the wave degrees higher and higher, do these same targets remain valid? Is this force still going to go into the prior degree fourth? At lower degree, it does, almost all the time. But I'll be looking to see if we do come here, or maybe we just shave off percentage and then head back up into wave 5. But the good news is that this is only wave 4, which in my opinion presents a huge opportunity, because we have a giant wave 1, giant wave 2, a giant wave 3, a giant wave 4. That should be followed by a giant wave 5. To even higher highs. I mean, even if we come down to like 1,000 on the S&P, and then comes up 9,000, could pretty easily do that. You're looking at a 9x from the lows, and that's just with the stock market index. I could see in that kind of scenario crypto and even individual names in the stock market outperforming that dramatically. So if you look at the RSI here, I do sometimes use RSI just to help confirm wave counts. So this is hitting this peak here, kind of right near where we had our third wave in this area. And this nicely lines up with our prospective fifth wave. Now this is the bearish case, all right, not the bullish case. I think there's a potential bullish case to be made, but right now we're looking at the bearish scenario, because it's better to be prepared and be able to take advantage of an opportunity if we do come down into any of these ranges. So we have a negative divergence from the top of the wave 3 and the wave 5. Wave 5 on the RSI usually makes a lower high than wave 3. So typically wave 3 within the wave sequence is going to be the peak, right? So from here, now this is the case here. So we have the peak right here at wave 3, and then the wave 5 makes a little lower high here, so we get the divergence. And then the money flow here actually did the same thing. So money flow didn't quite peak at the top of wave 3, a little before, that's fine, but then comes back up, divergence with wave 5, lining up almost perfectly with the RSI. Okay, so this will be, if assuming that this wave 5 here is done, right, it would complete this third wave, and we'll be seeing the largest correction in terms of wave degree that we've seen since the 1929 crash here leading into the Great Depression. All right, so each 5-wave sequence, you get 2 corrective waves, right? So this 1929 crash, this really sharp pullback. Wave 2s tend to be deep, more likely to be a sharp correction, which exactly what this was. Wave 4s are more likely to be a sideways correction and be more shallow by comparison. So it's a couple little observations on RSI on the monthly. So just a couple of times that we overthrew this lower boundary. All right, so that was during the great financial crisis here. Sort of tagged it during the initial dot-com sell-off. All right, so 1974 bear market. And then it's like close to the lows of the 1929 crash. So if we do get a prolonged bear market, if we're overthrowing this area, there's pretty good historical precedence for this coinciding with the bottom. If we zoom in here and see how close it comes when we're right at the low. So it's coming pretty close to the bottom. Now the nice thing is that it's not ticking back up until the bottom's actually in. So if we see it overthrow here and then it starts to pull back up, historically, based on these other instances, the bottom may be in. At least it would have been in this case. It would have been in this case. It would have been in this case. And so, in this case, we'll have to see. We'll have to see whether we do get all the way down here, overthrow it, and start to hit some of these targets here on the downside. But back to the wave count, so that we're pretty close to invalidating a 4th wave. NASDAQ already has. It actually did several weeks ago. So I've had the NASDAQ as already topped. It looks like the S&P may be close to confirming a top, or at least a likely top. Okay, that's all I got. Thanks.